your returns speak for itself, 50% CAGR. Why are you so bullish on the healthcare sector in India?
In the last decade, had you invested 100 rupees in Nifty 50, today you would have about 420, 430 rupees. But had you invested that same 100 rupees in India-focused healthcare companies, it would have become 1300 rupees.
Wow, 13 times.
13 times. Now let me give you how to make money off this macro data. If you have fever, what do you take? Do you take Dolo, Crocin? What do you buy?
Dolo.
Give me the price of a strip of Dolo.
I don't know, 10 rupees, 15 rupees.
The fact is you're guessing. It's about 33 rupees 76 paisa. But the fact is you don't know. And you have purchased it at least 10 times in the last 5 years.
Correct.
Now that's the business to invest in. Now India, RBI, they say they have about 700-800 tons of gold. But if you read research reports, Indian households plus RBI, we have 12 to 13,000 tons of gold. So if tomorrow a dollar debasement happens, and if all of us go back to a gold standard, India will again be one of the richest countries in the world.
And you're saying that is a possibility?
China had 1.2 trillion in US bonds. Today, I think that number is about 750 billion. So they've already sold 450, 500 worth of $1 billion. And that money is going where?
Why can't India get to a point where we have free healthcare?
No, we can. But
On today's episode, I have the Chief Investment Officer of InCred Asset Management. And his track record in the last few years has been upwards of 50% CAGR. To know how he is actually investing his money and how he's able to bring such record-breaking returns, I'm here in a conversation with him to learn as much as possible about how to pick the next winner stocks for 2026. Aditya Khemka, thank you so much for coming here on the show.
My pleasure.
My first question to you is that you manage more than 1,500 crores of public's money. But I'm interested to know, how do you manage your own personal portfolio as of today in 2025 December?
Understood. So it's an interesting question. So what I do right now, Sharan, is I divide my, let's say, 100 rupee portfolio in 3 buckets. So it's like a multi-asset allocation strategy. I take, let's say, 30 rupees, it's in gold and silver, derivatives or ETFs.
Okay.
30 rupees is in my own fund because I believe I can do justice to my money more than anybody else. And the balance 30 rupees is largely real estate, real assets and other funds, right? And balance 10 rupees is cash, liquidity. Now, why liquidity? Because markets are so uncertain. We are today sitting in an environment where geopolitics is changing, interest rates is changing, and we don't really know which way markets will go in the next 5 years. So we need to have some dried gunpowder ready. So today we have that 10% ready with us, that tomorrow if things were to change, and if I need to take some asset call, this 10 rupees will help me to make that asset call. So that's how we are today positioned in my personal portfolio.
So this is your personal portfolio?
That is correct.
Got it. So now let's deep dive into some of your funds. I was looking at one of your funds, and you are a veteran in the space of healthcare investing in India, which is such a nascent industry in India. It is very mature in the United States, but in India it's very small.
Yes.
So can you tell me a little bit about why are you so bullish on the healthcare sector in India? Obviously your returns speak for itself, 50%, 55% CAGR. And I think this year alone, you've gotten almost 18-19% returns.
Right. Yes.
When the market has been flat.
That's right.
So can you tell the audience over here, why is healthcare going to boom as a sector in India going forward? Maybe if you can share some macroeconomic trends or parameters.
I will do that. So look, India today is about $2,400-$2,500 per capita GDP.
Right.
Of which we spend about 3.5% on healthcare.
Okay.
Right. So look at your own households. Look at my household. Look at your own households. In the past decade, has your food and beverage spent kept pace with your earning growth? The answer will probably be no.
Has my food and
beverage spent
increased
in line with your earnings? So if your earnings have compounded by, let's say, 12% over the past decade, has your food and beverage spend
increased by
12% every year?
I would say no.
Exactly. Same goes for your clothing. Has it happened? Probably not.
No.
But has your healthcare expense grown faster or slower than 12%?
I think it depends on what stage of life you're in, right?
That's number one. Number two, your family members. If you have elders in your family.
Okay, looking at a family as a whole.
Obviously, as a family. So you're looking at household income and you're looking at household spend on healthcare. So you're looking at parents, you're looking at kids, right? So young people like me and you in our 30s, 40s, we don't need to spend as much.
Yeah.
But people who are younger and people who are older definitely need to spend more.
Correct.
Right? So the whole objective of saying this is that for the past decade, once you cross $2,500 per capita GDP, roti, kapda and makan is largely taken care of. That is the global trend.
Yeah.
That after that, whatever incremental earnings come, individuals want to spend that earnings on themselves. I want to look better. I want to, appear better. I want to live longer. I want to live healthier.
Right.
And hence, healthcare becomes a very large part of your consumption bucket. Right. That is the trend.
Got it.
Now, this is the macro data. Now, let me give you how to make money off this macro data.
Okay.
So I told you over the last decade, India's GDP spend on healthcare has gone up from 2.7% to 3.4% per capita.
Right.
In the last decade, had you invested 100 rupees in Nifty 50, so 2012, had you invested 100 rupees in Nifty 50, today you would have about 420, 430 rupees. That's about a 12% CAGR return, which is phenomenal. Given that our inflation has been around 6 and 7, you have gained purchasing power by 5 to 6% every year.
So around in 12 years, it has become 4.5 times.
4.5 times, right? So that's a phenomenal return. But had you invested that same 100 rupees in India-focused healthcare companies, it would have become 1,300 rupees.
Wow, 13 times.
13 times.
So it would have been 3 times faster.
3 times faster. So while Nifty is giving you 430, healthcare is giving you 1,300.
Also, I think in Nifty, the allocation of healthcare is very small.
Very small, 3%.
Yeah,
it's just 3%. So you get negligible exposure. Even that 3%, Nifty gives you allocation on 3% on stocks like, let's say, Sun Pharma, Dr. Reddy, Cipla.
Which are not growing as fast.
These are exporters. They are not focused on the Indian healthcare ecosystem.
Okay.
So for these 3 companies, let's say Sun, Dr. Reddy and Cipla, which are the Nifty stocks, 60 to 70% of the revenue comes from Europe and US. Now, these are mature healthcare markets. They are growing at 1-2%.
Right.
So therefore, these stocks will not give you the kind of returns that the Indian healthcare stocks can give you because they are focused on a market which is growing at 10-12%. Right. So that's one angle that you already would have made more money. Now, is the valuation today basically accounting for what has happened in the past decade? So if I don't tell you what is happening right now, what you should presume is that, look, this bucket has outperformed Nifty by 3x.
Yeah.
Nifty is 430, this guy is 1300 over the past decade. Hence, public would have learned. And now these stocks must be really expensive, right? Because the public now knows that these companies will grow faster.
Right.
And food and beverage and clothing and etc. will grow slower.
Huh.
The answer is no. They just haven't learned. Let me give you data. Avenue Supermarts, our largest food and beverage retailer, right? The market cap is 2.5 lakh crores.
Okay.
The cash earnings are 2,500 crores.
Okay.
It's 100 times cash earnings.
Okay.
Trent, our largest clothing retailer, market cap 1.5 lakh crores, cash flow is 1,500 crores.
Okay.
100 times earnings, cash earnings. Our largest healthcare provider, Apollo Hospitals, market cap 1 lakh crore, cash flow 2,100 crores, less than 50 times. So what we do through our healthcare fund, Sharan, we are playing this simple valuation and growth arbitrage. A pocket which is growing faster, has been doing so for the past decade, will do so for the next 4 to 5 decades, is available at half the valuation of pockets which are going to grow slower and are very, very expensive.
Why has the market not realized this? Because the market is not just me and you. There are crores of people.
So look,
because this data is publicly available.
It's public data. So numbers I gave you are FY25 numbers. So they are all actual reported numbers. These are not estimates.
Right.
And market cap is obviously real time. I don't know what people, I think there's a problem in the way the healthcare index has been designed. So when I say healthcare, the first name in your mind before you heard this would have been Sun Pharma or Cipla or Dr. Reddy.
Yeah.
Now, if you look at their returns over the past decade, so Sun Pharma 10 years back was about $1,200 a share. Today, I think it's about $1,800 a share.
Not moved a lot. In the 10 years, it has moved by 30%.
30%. So that's about 2% CAGR returns or 1.5% CAGR returns. Same for Dr. Reddy's would be a single digit CAGR return stock. Cipla would be a single digit CAGR return stock. So when I say healthcare, people imagine these companies.
So basically the poster boy companies of healthcare sector has not performed well.
They have not performed.
And that sort of gives a negative sentiment to the entire industry.
Exactly. But if you are willing to go beyond the poster boys, stocks have done phenomenal
returns.
Torrent Pharma, for instance, large cap, 1 lakh crore market cap today. 10 years back, stock price was, I think, 500, 550. Today it is 3,600, 3,700. In the same time, that's Sun Pharma.
Can you repeat that?
So Torrent Pharma 10 years back was 550, 560.
Okay.
Today it is 36, 3,700.
Wow.
So it's been 7-8x in 10 years.
Wow.
And this is Torrent Pharma and Sun Pharma. Now, to your mind, Torrent and Sun Pharma both are pharma stocks, right? And Sun Pharma is 4 times the market cap of Torrent even today.
Right.
So for you, Sun Pharma is the benchmark of what is happening in healthcare.
Right.
But that's not the answer. Sun Pharma's 60-70% revenue comes from exports, which is Western Europe and US, which are 1-2% growth markets. Torrent Pharma's 90% revenue comes from branded generics like India. And this is a high growth market. And this is a market where you have branding.
So now that you've explained fully about this healthcare sector,
Yeah.
now I want to go one level deeper.
Go for it.
Let's now break the healthcare into subsectors.
Sure.
Can you explain the different subsectors in healthcare, so that the audience can understand?
Perfect. So there are 5 pockets of healthcare.
Really?
Yes, 5.
Okay.
In fact, there are 6. So there is others which has other pockets.
Okay.
But let's go for the first 5 primary ones. So there is generics, unbranded generics. That is your Sun, Cipla, Lupin, Cadila. They all fall in this bucket. And then explain this. Then there are branded generics. This is where you have your Torrent, Mankind, MCure. These guys are here. Then you have your hospitals, your diagnostics, and then you have your API and CDMO companies. These are raw material manufacturers.
And
for
all
healthcare.
of these types are publicly listed companies also.
They're all 5 publicly listed companies. They're all publicly listed.
And these are just categories.
Yeah, these are categories.
Wow.
And then there is a 6th. The 6th is your healthcare insurance, medical devices, medical device components, and ancillary industries.
And totally how many companies are there in this entire universe?
So if you take all listed stocks, there would be around 390, 395 companies.
Wow. So 390 publicly listed companies in the
the 6
healthcare
buckets.
sector.
Yeah.
Wow.
Yeah.
Are there any other, just a quick deviation, are there any other industries which are so well placed in terms of macro growth like healthcare in India?
So I think lenders, so we come to NBFCs and MFIs when we discuss that. I think they are very well poised.
Okay.
I don't think people look at NBFC, MFIs in the right way.
Okay.
The way you think of it is RBI as the manufacturer of the currency. You think as private banks as wholesalers, and you think of NBFCs and MFIs as retailers of the currency.
Okay.
When you think of it in that fashion, you should sense the fact that Indian households today, have enough scope for leverage. Balance sheet repair in Indian households have happened since COVID, right? So in COVID, we saved up a lot of money, we delevered, and now the gold and silver prices going up. That is helping delevering, the Indian households. So the Indian households will again go through a credit upcycle. When they do, the retailers make the most amount of money because of the last mile.
Yeah.
And that's what the NBFCs and MFIs are.
Okay.
So I would say akin to healthcare, the only other industry, but this industry is a lot cyclical compared to healthcare, which is very, very secular.
Okay.
The only other industry which is maybe secular and as well positioned as healthcare is probably education.
Education. Interesting.
Because in India, education is not an option. It has somehow become an option outside India where parents are okay if the kids don't study. Indian households are still that, the papa ka chhadi and the mama ka dant if you don't study. So I think that is...
But education, there is no publicly listed companies.
Exactly.
I think right now...
that is where the problem is. So we have a physics wala probably.
Who have recently come
up with an IPO.
Nobody has been able to create a big whale of this industry.
A big whale of this industry, number one, and we don't have enough stocks to create a portfolio of it.
Correct.
Right? You can take a 1 or 2 stock call, but you can't really have a portfolio. So if you look at the secularity of healthcare, only education can give you. But
when you mean secularity, it doesn't go up and down that much.
Exactly.
It's like a linear up.
It's like a linear up. The industry is like a linear up, right? And MFI, NBFC is cyclical, but they are right now at the bottom of a cycle.
Okay.
So for the next 3-4 years, even this pocket will give you very good returns. So will healthcare, so will education, but we don't have enough stocks in education.
So coming back to healthcare.
Healthcare now.
Okay. So now within healthcare, you mentioned these 5 different subsectors.
Yeah.
Now, out of these 5 subsectors, which are the fastest growing subsectors in healthcare?
Yeah. So today, the fastest growing sector in healthcare is hospitals.
Which one?
Hospitals.
Hospitals.
Yes.
Okay.
Now, why hospitals? 2-3 data points. So India today has 0.8 beds per 1,000 population.
Okay.
0.8 beds per 1,000 population. For convenience sake, let's say 8 beds per 10,000 population.
Okay.
The global average is 27 beds per 10,000 population.
Wow. We're 3 times lesser.
We are 3 times lesser, number one. Number two, the developed markets of South Korea, Singapore, they have 120 to 130 beds per 10,000 population.
Wow.
So the global average of 27 comes because you have Northern Africa there, which has close to no beds.
Right.
Right. So that pulls down the global average.
Right.
So if you move the underdeveloped economies out of this equation, the number isn't really 27, it's more like 57, 58. And we are at 8.
Wow.
So the gap.
Wow.
So what that means, Sharan, is that tomorrow, if all hospital chains in India, including government hospitals, were to pentuple their capacity overnight,
Pentuple means 5 times.
5x. we would still be underpenetrated because that will take us from 8 to 40. Whereas the global average, excluding the underdeveloped markets, is close to 58, 57 beds.
And you're saying a developed market like South Korea has 100
beds.
120 beds per 1,000.
Per 10,000.
That's a healthy number?
Per 10,000 patients.
Okay.
1,000 patients, 12. Per 10,000 patients, 120.
Okay.
That's a healthy number.
Okay.
And you know that South Korea is a very interesting example. I don't know if you know this about South Korea. 47% of the adults in South Korea above 25 years of age have had cosmetological surgeries.
Right. The cosmetic market is very big there.
So they have 3 cities. Like we have Kota here in India, which is dedicated to engineering studies. They have 3 cities in South Korea dedicated to cosmetology surgeries.
Which is basically like plastic surgery kind
Plastic
of stuff.
surgeries.
Got it.
Yes. So, and again, South Korea is
That's a big market there.
It's a huge market. And again, South Korea is at $50,000 per capita GDP. So brings me back to the point that as you
they're
get
at $50,000
per capita.
So it's a developed, super developed country.
Super developed
Very
country.
so close to US.
So US is 80. These guys are 50. But that brings me back to my point that if you have more money, as you get more money, you find means and ways to spend it on yourself. Now that may be for a slimmer nose or a prettier eyeline and you know whatnot. But you spend it on yourself.
Right.
Because
so there is
you
no
just have
limit
it.
to spending on healthcare.
Absolutely.
The richer and richer you get, the more money you'll spend
More
on
money
yourself.
you spend. Absolutely. So that is why...
Because there is a limitation how much food you can put in your body.
Exactly.
Limitation to how many clothes you can put. But there's no limit to how much money you can invest in your health.
In your health, right? So sports people like, let's say, Ronaldo or singers like, let's say, Madonna, they've insured parts of their body for millions of dollars.
Correct.
They pay insurance premiums.
Correct.
Ronaldo pays a crazy insurance premium for his kicking leg, I think the left leg.
Right.
And Madonna pays for her butt and so on and so forth. I mean, they and some singer has a voice insurance. I think Taylor Swift has a voice insurance.
Right.
So, you know, you find ways to spend on yourself when you have enough money. And so if the argument for investing in India today is that we will be big tomorrow, then the sector which will be much bigger compared to what it is today is healthcare. So the fastest growing pocket is healthcare.
Hospitals.
That was hospitals. That was your question. And I think hospitals, even if the capacity pentuples or quintuples, we still have a lot of scope for growth because we are just so underpenetrated.
Right.
And we in India today, people still believe in traditional medication. You have people, you know, looking at Ayurveda, Homeopathy as a first line.
So the raw material for growing hospitals is doctors. Right. You need more and more doctors.
Yes.
But India is not producing enough doctors. Is that the problem?
That is true. So if you speak to an Apollo hospital today, they're the largest chain in India. They have, I think, 15,000 beds today in India. And if you speak to them, why are you at 15,000 beds? Why are you not at 50,000 beds? You're a 40-year-old company, for God's sake. Right? So you had enough time to expand.
They can just get debt and capex and build more hospitals.
Build more hospital, right?
Right.
They would say, I have no problem of capital. I have no problem of catchment area. I have no problem of demand. My only problem is talent. I do not have enough nurses and doctors. Because in India, nurses and doctors, once they're educated, they go out of India because they get higher salaries.
Why can't they pay higher? Why can't Indian hospitals pay good salaries to our doctors?
Because the patients aren't willing to pay the cost. It has to be borne by the patient.
But hospital bills are expensive only, no?
See, that's exactly my point. Look at the entire ecosystem. So there is a doctor, there is a hospital, which is an entrepreneurial setup, and then there is a patient who's a consumer.
Okay.
Right? Now, the consumer says, I'm paying very high bills.
For example, when I go to a clinic in Mumbai right now for 5 minutes, 10 minutes consultation, 2,000 rupees.
Fair.
Which is expensive.
I take your point. But hear me out. Consumer says, I'm paying horribly high prices. Doctors say we are not getting paid enough. And so if this is true and this is true, then the hospital must be making a chunk load of money, right?
Correct.
He's charging you and he's not paying the doctor.
Correct.
He must be paying a chunk load of money. How do you determine if a business is making a chunk load of money? ROE, return on equity?
Correct.
Any company or a business with, let's say, more than 30-40% ROE is a supernormally profitable business.
Agreed.
No hospital in India makes more than 25% ROE.
Okay.
Apollo as a hospital chain makes 17% ROE. Are they supernormal? And our cost of capital is how much? 15%?
Right.
That's the cost of equity?
Yeah.
So if cost of equity is 15% and on an average hospitals in India make 17-18% ROE, how are they supernormally profitable?
So what is happening? Where is the issue?
No, the issue is that Indians are poor.
Okay.
The issue is we are not rich enough.
Got it.
Right?
So we need to
We
be willing
need
to pay
pull
more.
up the income. We need to pull up the income. See, talent is going to be fungible, right? You train a doctor here, that doctor can go and practice in 40 countries where today Indian medical education is enough. You don't need to do anything once you land there. All you need to do is start practicing. And you will make 4x, 5x the income that you're making in India. The doctor has no incentive of sticking to India. Same for the nurse. Once she's trained, she can just move out to Dubai or a Singapore or a London and make 5, 6, 7x. So why does she stay back in India? Right?
So how do we solve this problem? Because if this remains a problem, there will be huge migration of doctor talent.
Exactly. So one thing which has happened is the government insurance. So we have Ayushman Bharat scheme in India. Now Ayushman Bharat scheme basically is saying that if you are someone with weaker economic sections of the society, you can take the government card, you can go to a hospital, the hospital will treat you and the government pays the hospital directly. You don't have to pay anything.
Right.
So that's a step in the right direction, although that's not the right solution for this point. The simple reason being that Ayushman Bharat rates are too low. So most hospitals don't want to treat Ayushman Bharat patients as a priority.
Because they don't make money from it.
They're not making money out of it.
Government is also paying less.
Government is also paying less. So end of the day, healthcare insurance has to grow.
Correct.
So most of the countries in the world, Sharan, it is the healthcare insurance that protects the local population from getting bankrupt because of healthcare.
But not enough people are taking insurance.
Not enough people are voluntarily taking it. Thankfully, our country has laws where an employer with more than certain number of employees has to mandatorily provide health insurance to their employees. So thankfully, we have the organized sector sort of taken care of because of the government law. But the private insurance or the voluntary insurance, very few people are going for it.
Which is needed. Which is needed.
But one good thing which happened here is that the government just made it the GST free.
Right.
So earlier you were paying 18% GST on your insurance premiums.
Right.
And now it is 0%. So thankfully it has suddenly gotten more affordable.
Correct.
So I'm hoping that this will lead to better insurance penetration.
Right.
Which would probably reflect to more affordability of healthcare.
Right.
But to say that hospitals make a chunk load of money and the patients get looted, I think that's very, very unfair.
I mean, that's how it looks.
That's how it appears to us.
Because you see the big hospitals, itna paisa kharch ho raha hai.
Yeah, but if you look at their financial statements, it's like 17-18% ROE.
So the only way to fix this is for hospitals to increase prices.
Yes.
And patients have taken good insurance to bear with those prices.
Yes.
Which increases more salaries for doctors. And the whole ecosystem survives.
Then survives. That's correct.
So why can't India get to a point where we have free healthcare, like in Europe?
Oh, no, we can. But, our fiscal deficit doesn't allow us. So look, what happens in Europe? When they collect taxes, they use that taxes to provide you free insurance. And that insurance basically enables healthcare for all.
Yeah, because see, there the costs are high.
Absolutely, significantly higher.
But people don't really care about it too much. Because they're like, yes, there is waiting period. I don't deny with that.
Yes.
But it's free at the end of the day.
Free.
And doctors are well compensated over there. They're well respected over there. And they make a lot of money.
Yes.
So that can't happen here?
It can happen. But we have to get richer as a country. Because look, our current government's budget, look at what we are allocating the budget to. We are allocating it to defense. We are allocating it to education, to water, clean energy. I think those things are far more important at this stage for us compared to, let's say, a healthcare for all situation, right? So I think that day will come. But for that, first we need to get our other priorities sorted. Again, the taxes need to go up. As you know, 1 or 2% of our population files for taxes.
Right.
Less than 1% actually pays tax. So these numbers need to go up.
Correct.
And the government exchequer needs to be full enough. I'm sure it is a priority for them. Because, there's no point defending a population which will otherwise die. Right? So if you're spending on defense, you have to think of healthcare as well.
Right.
Because end of the day, it's about the longevity of your population.
Correct.
Right? Both of them are about the longevity of your population.
Okay. So we talked about hospitals. Any other subsector of healthcare which is growing fast?
So I think diagnostics is the second fastest growing pocket.
Okay.
Now, why diagnostics? Essentially, and Sharan, some of this data will blow your mind.
Okay.
So 80% of Indian diagnostic industry is unorganized. 80.
Okay.
Is unorganized. These are your mom and pop diagnostic stores that you see on the road with no branding. Some doctor has opened his own store. 20% is organized. Now, the entire diagnostic market in India is growing at 10-11%.
Okay.
The organized guys are obviously growing faster. So they are growing 12, 15, 20% top line. So if your top line growth is between 10, 12 and 20, you can imagine that your bottom line growth is 15, 25, 30.
Okay.
Right? Now, of all the diagnostic tests being done in India today, only 2% diagnostic tests in India done today are going to be done in NABL certified labs. NABL is a government certification for the accuracy of the test.
Only how much percent is in that?
2.
What? 2% are properly doing it.
So 2% of the tests are done in accordance of the SOP, which the government prescribes.
Okay.
And the government says that if you follow this SOP, I take the guarantee that your test results are accurate. So 98% of the tests done today in India are being done in labs, which cannot guarantee the accuracy of the test result.
Wow.
So one way to slice it is 20/80, organized, unorganized. Another way to slice it is quality compliant and non-quality compliant, which is 2 and 98.
And these organized players are usually compliant, right?
No, because the 20% share
Right.
and 2% volume, right?
They are also not properly compliant.
Again, because if you go for the quality certification, it costs you money. And if it costs you money, you need to be able to charge higher to the patient. And the patient, if he cannot pay, then you would rather give him a non-compliant test.
So
I
what
think,
else? This is diagnostics. Anything else?
And we have then the CDMO space in India, or rather the raw material space in India. Now, we discussed geopolitics before this podcast started. Today, China manufactures 80% of the raw material for pharmaceuticals.
Okay.
So when US and China were going at it with the tariff war, China pulled up a bargaining chip saying rare earth metals and rare earth magnets, right? Now US is trying to create an alternate vendor ecosystem for rare earth magnets and rare earth metals. They're supporting Ukraine or whatever, they think some minerals can come from there so that they don't have to look towards China as the only source for these materials. Another card which China has in its pocket right now is the pharmaceutical raw material card. 80% of the raw material of the world comes from China for the pharmaceutical industry.
Okay.
India has about 10% and Eastern Europe has 10%. So that's basically the entire 100%. Now, what is happening today is that the Western economies are telling their pharma companies, do not source only from China. You have to source from India, develop an alternate vendor in India.
Okay.
So that tomorrow, if China, they try to pull up that bargaining chip, we can look towards India and say, look, we are not going to buy it from China, we'll buy from you.
Nice.
And we can sort of reply to China. But today they can't reply to China at all. Now, India sells API worth about $4 billion. China sells about $40 billion.
Wow.
And some of that market share will shift to us. Now, it can be 10%, can be 20, can be 50. I don't know. But directionally, those businesses will come here.
There is tailwinds.
There is tailwinds. And all API companies in India, all without exception, all the raw material manufacturers in India have done a substantial amount of capex. Basically because their order books
Because they know that this is going to happen.
It's going to happen. So their order books have already gone up. So they can't service that order book with current capacity. They need more capacity to service the order book. And which is why we also have a PLI in India on raw material manufacturing. It came about 3 years back. So government announced this PLI scheme, product incentive scheme for raw material manufacturing in pharma. So that's the third pocket where we feel there's a lot of tailwinds in the sector.
Okay, so just to summarize what you've said, healthcare industry fastest growing. Within that, hospitals, diagnostics, and CDMO manufacturing.
Contract development and manufacturing.
These are the top three.
Yeah.
Now, if I look at your top 5 holdings, your top 5 holdings accounts for almost 60%
Yes.
of your overall fund,
That's correct.
right?
Yes,
Which
correct.
is a very concentrated bet on these 5 companies.
Yes.
So can you explain what these 5 companies are?
Sure.
And why these companies?
Sure.
Based on all the macroeconomic and all the subsectors that we talked about,
Done.
why have you zeroed in on these companies?
Correct. So let's start with our topic today, which is healthcare global enterprises.
What is this sector?
Yeah. So healthcare global enterprises is a hospital chain
So the hospital chain. The
chain.
fastest growing subsector in healthcare.
in healthcare.
Okay.
And this hospital chain, this hospital is particularly based out of Bangalore, but they are spread across India now.
Okay.
Other than North India, they are in South India, West India, and Eastern India. And they do only cancer patients.
Oh.
So they are an oncology super specialty hospital.
So this comes under your case mix,
Case mix.
where you can't increase the price.
Yes.
But if your case mix is more towards oncology,
Your revenue per bed is higher.
ARPO is higher.
ARPOB is higher.
ARPOP is higher.
ARPOB is higher.
Got it.
Now, that's one angle of oncology. Second angle to oncology is it is the fastest growing disease in India today.
Cancer is the fastest growing disease in India.
By 2030, India will be the cancer capital of the world.
We're
We'll
already
have the
there.
highest number of cancer patients. No, today we are the diabetes capital of the world.
So we'll be both then.
Yes.
Wow. So by 2030, India will be the cancer capital of the world. And you are now investing in hospitals which focus on cancer.
Only on cancer.
Oncology.
Right? Only oncology.
Okay.
Number 3, think of it, right? So I told you Apollo Hospitals, for example, no buy-sell recommendations, just giving you a rationale.
Sure.
So Apollo Hospital, 1 lakh crore market cap, 2,000 crore cash flow.
So 50 times earnings. Yes.
HCG, 9,500 crore market cap, 320 crore cash flow. So 30 times.
Okay. This is the company that you have invested.
Yes. HCG is Healthcare Global.
Okay.
Right. So HCG is trading at 30 times and Apollo is trading at 50 times.
Correct.
Apollo is multidisciplinary. So they will have cancer, they will have maternity, gastro,
everything,
cardiac, mix of all. This guy is purely cancer. Now think of Apollo for 1 second. If I am the Apollo unit head, this year, let's say I treated 100 patients. Of those patients, many will be maternity, some will be cardiac, some will be gastro, some will be ortho, some will be cancer.
Yeah.
So out of these 100 patients, how many patients will recur for me next year? Will be repeat patients next year?
It will be mostly the cancer patients.
Mostly the cancer. So if cancer is, let's say, 20% of my revenue, of those 20 patients, let's say 4 pass away because it's cancer.
Right.
15, 16 patients probably will come back to me next year.
Correct.
So next year, I start my patient base at 15, 16, and then I have to acquire another 100 patients to show growth of 15% year over year.
Okay.
Yes?
Right.
For HCG, if I have 100 patients this year, let's say 10 pass away, let's say 10 go to different hospitals because they don't like the doctor or they don't like the treatment.
Sure.
I start next year with 80.
As my base.
That's my base.
Wow.
Now I have to add another only 40 to show 20% growth year over year. And this guy had to add 85 to show a 15% growth.
Wow.
So you see the difference here.
So capex required here is lesser.
Capex is lesser, but customer acquisition cost, OPEX is lower.
Is lower, yes.
Because customer acquisition cost is your largest cost.
Marketing cost also
Marketing
is lower.
cost,
They're
lower.
recurring.
Because these are recurring patients. They are recurring revenue streams.
Interesting.
These revenue streams in multi-specialty are one-off. A maternity patient will come, 3-4 days deliver the baby, and will not come probably for next 5 years or maybe never in his life.
Looking at this business and finance lens in something of cancer is something very new for me. Like,
yeah, but imagine how can this help you make money, right?
Right.
So keep the emotional angle out of it.
Right.
Just think of it running as a business, right?
Correct.
I am running a business where 80% of my patients will come back next year because they are patients for life. They are customers for life.
Correct.
Right. And this guy
LTV is very high here.
Yeah, LTV is very high here. Long-term value of the patient is very high here. And here, only 15% of my patients come back. 85% of my patients go away.
Because they're one-time use.
One time, right? So now we discuss this in context of wealth managers, right? So this guy has 85% one-off, 15% recurring revenue. This guy has 80% recurring revenue, 20% one-off because they die away or they go to a different hospital.
Okay.
Which of the two entities deserve a higher multiple?
This one, second guy.
Yeah, which
The
is
HCG.
HCG.
Right.
But today HCG is 30 times.
The market is not
This guy is
factored
50
it.
times. So this guy is 30 times. This guy is 50 times.
Interesting. So that's your biggest pick.
Biggest pick.
This I think is about 15% of your capital.
16 to 17%.
16-17% is in this.
One stock. HCG.
Wow.
Right?
So second, what is the other?
Yeah, the second largest pick we have is let's say Krishna Diagnostics.
Krishna Diagnostics.
Krishna. Now
This
you
is
may
one
not
of the fastest growing subsectors you mentioned.
Correct.
Diagnostics. Let me guess.
Yes.
They are organized, obviously.
Yes.
And all of their tests are government approved.
Yes.
Right?
Yes. So Krishna is a B2G diagnostic player.
What is B2G?
Business with government. So if you assume that let's say India has 100 hospitals and 100 labs today, of this 100 hospitals and labs, 60 are owned by the government of India. They are public hospitals and public diagnostic labs.
Okay.
Right? But because they are public, they are not well run. Right? So what happens
because they're government.
Because they're government, they are not well run.
Correct.
Right? So mismanagement, inefficiency, so on and so forth. So only 3% of the patients who are willing to pay, not free patients who are willing to pay.
3% of the patients willing to pay. Okay.
Actually come to this 60% of the infrastructure which is owned by the government of India.
Okay. Got it.
The balance 40% which is owned by private owners, they cater to 97% of the patient population
Who are willing to pay.
Got
it.
Right?
Understood.
So this is the math. Now,
so basically people who are willing to pay prefer private.
And they obviously won't prefer the government, right? Because government, why would you pay money and get an inefficient service, right?
Right.
If you're getting it for free, it's okay.
Yeah.
Because you can't afford.
Yeah.
But if you can afford, you go to a private.
Sure.
Right? So which is why the numbers look that way. Now, Krishna's job or business model is essentially, so what government has started doing is they've seen these numbers, the government of India, and they are saying we need to change this. So now they can be, so currently they are the owners and the operators of the asset.
Yeah.
They are saying we need to change where we'll become the owner.
And operator will be somebody else.
Operator will be a private guy.
Smart.
PPP. Public-private partnership. That is where a Krishna comes in. Krishna says, I'll bid for your lab. I'll manage the lab. So Krishna does the lab management for government hospitals.
Interesting.
Within the government hospital laboratories.
Very good moat.
So
Once you get into this, you're in.
Yeah. So where we are shooting, there's a nearby hospital of Baba Saheb right on the JVLR signal. If you go to that hospital, it's a government BMC hospital. But as you enter the hospital, there's a diagnostic lab there, which is managed by Krishna. And you'll see the difference the moment you enter the diagnostic lab premise versus when you're outside the diagnostic lab premise.
Okay.
Because when you're outside, you will see the dirtiness, you will see the dog sleeping here and there, a stray dog, you will see patients lying on the floor, nobody caring. The moment you enter the lab, it's clean. People have those head nets and gloves. It's air conditioned.
Okay.
The moment you go and say, I want to get this test done, you get a number, a slip which has a number, patient number, that okay, will take you after 1 hour. So they'll tell you upfront that there's a 1 hour waiting. And in that 1 hour, you can go and relax, sit, have a cup of tea, whatever.
And this is free?
Free.
Oh.
Because the government pays for it.
Government pays for it. But good, yeah. Such kind of service free for the population.
Correct. So Krishna as a business started in 2011.
I think more people should know about this. That you go to those hospitals where Krishna is already integrated so that you get good quality tests for free.
Tests for free. So, and if not free, so there are two models. One is the credit model where the government says that you do the test for free, I pay you cash. So government pays Krishna. The other, so that is the model I think they have in Maharashtra. But there are other states which follow their own model. They say we'll subsidize the price, but the patient has to pay the lower price.
Still subsidized?
Subsidized, yeah.
Cheap.
So for instance, a head MRI, the MRI of your head, if you get it done in, let's say, Dr. Lal, it will charge you, Dr. Lal Path Labs.
Lal Path Labs
Lal
have
Path
taken
Lab,
their
yeah,
service.
So let's say if you get it done Dr. Lal Path Lab, they'll on an average charge you 6,000 to 7,000 rupees.
Correct.
For a head MRI.
Correct.
In a Krishna designated lab, if you go, they'll charge you around 2,500 rupees, 2,500 rupees.
Interesting.
Better machinery because it's latest technology. Government tender, this says you have to employ the latest tech. So 124 slice MRI machine, Tesla machine, they'll use that. And they'll give you it for 2,500 bucks. Whereas Dr. Lal might have an older machine, or they may have a later machine, but they most likely will have an older machine, and they will charge you 6,000 bucks.
Interesting.
The reason is volume. So the highest cost for a diagnostic test, a diagnostic laboratory is the cost of the machine.
Correct.
So my machine is my cost. Now, if you go to Dr. Lal, what you realize is if you sit in a day in their lab where they have that MRI machine, in one day, let's say Dr. Lal would be running 3 to 4 MRI scans.
Okay.
That's it.
That's it.
That's the kind of patient volume they get.
Okay.
Right? And hence they have to charge you 6,000 rupees to break even on the machine and make a decent profit.
Correct.
You go to this lab, the one that I told you about on Jogeshwari. It's a 24-hour lab. So there are 3 shifts, 3 technicians come, 8-hour shifts each. And the machine never shuts down. So they do on an average 22 to 23 MRI scans per day on that machine.
Wow. So 10 times more tests.
10 times more tests. And that, then they charge you 2,500 bucks.
Charging 1/3 the price, but my volume is 10 times more.
And my machine will last the same that this guy's machine will last.
So 1/3 into 10, 3 times. So I'm getting 3 times more revenue.
Yes.
Okay.
And my margin therefore has to be higher.
Correct.
So despite Dr. Lal, let's say charging a 6,000.
My cost is same.
Yes.
Revenue is 3x.
Yes.
So my margin is higher.
Margin is higher.
Interesting.
So despite Dr. Lal charging you 6,000 bucks and Krishna charging you 2,500, Dr. Lal reports a lower margin than Krishna does.
And when do you think the boom will happen for this?
I'm hoping next 2 years. But I think in, let's say, 3 years' time, can Krishna be 3x of their current profit? Yes.
Okay.
They'll probably be 3x of their current
Earnings
profit.
could be 3x.
3x.
And prices always follow earnings.
Price could be anything depending on what happens to the multiple.
Right.
I think the current multiple is very understated. So Dr. Lal, just for a sense, Dr. Lal today trades about 35, 40 times EV EBITDA. Krishna is at 10 times EV EBITDA.
Okay.
So the valuation gap is enormous. But that's for a reason. People feel Dr. Lal is B2C, hence there's a brand recognition, there's a last mile connectivity.
Right.
Krishna is B2G. So sometimes the tenders, the payments get stuck with governments. It takes time to release payments and all that.
Right.
So there are perceptions about, a B2G model and a B2C model. And I agree that B2G should trade at a discount to a B2C. But is 35 and 10 the right amount of discount? I don't know.
Probably not.
I don't know. So I am saying it's probably not the right amount of discount.
So that was your second stock.
Second pick. Now, just to finish on Krishna, by the way.
Okay.
2011, they had 8 crores of revenue.
2000?
11, they started with 8 crores of revenue.
Okay.
Today, 2025, they're 700 crores of revenue.
Wow. 100x revenue growth in
14 years.
In 14 years. Wow. Phenomenal entrepreneur.
And Krishna is right now only in 17, 18 states.
Okay.
We have 32 states.
Okay.
So there's width left to be explored.
Yeah.
In some of the states,
So this is something that can be horizontally integrated in every part of
in
India.
every part of India.
Yeah.
And why just India? You can export this business model
Right.
outside India. The Northern African countries and all, they have nothing, boss.
Right.
You can help them out, right?
Correct.
And that's one part. So there's width, right? In terms of India and outside India. Then there is depth. So there are certain states where Krishna has only 2-3 hospitals. These are dipstick right now. So Krishna, when they started, that 8 crore came from Himachal Pradesh, 2 hospitals.
Oh, they started from Himachal Pradesh.
Himachal Pradesh, 2 hospitals, 8 crores per annum revenue. Today, only from Himachal Pradesh, Krishna does 70 crores of revenue, which comes out of 9 hospitals.
So deep integration into the state.
Into the state, and then width on new states.
And new
which,
countries.
And new countries beyond that.
Wow.
So, I mean, the scope is like huge.
Yeah.
So that's our second best pick, Krishna.
Interesting. Yeah, these are what people say, right? Like, start businesses which are boring.
Yes.
Which less people want to do.
Yes.
And you'll make a lot of money. Right? Like, how many young people in India today are thinking, yeah, when I grow up, I will open a diagnostic center and make money. Nobody
Everybody's
wants to
developing an app, no?
Everybody wants to develop an app, or I will sell the next cool t-shirt.
Absolutely.
Interesting. Okay, so that's the second company.
Yes.
What's next?
The third largest position we have is a company called Thyrocare Technologies.
Okay.
It's also a diagnostic company like Krishna. Now the thing with Thyrocare is they are a pathology focused. Now within diagnostic you have 2. You have radiology and pathology. Radiology is essentially X-rays, MRI, CT scans.
Okay.
The imaging businesses, those are radiology.
Okay.
Pathology is your blood tests, your HbA1c, your blood pressure, whatever, right? Your blood tests. So Thyrocare, when we invested in it, they were present in 3,500 pin codes in India. And they were expanding that presence from 3,500 to 9,500 pin codes.
Okay.
Now the difference between, let's say, Thyrocare and a Dr. Lal, again, I'm taking Dr. Lal as the gold standard of our industry,
right?
The diagnostic industry. Dr. Lal competes with the unorganized to take share from the unorganized.
Correct.
Thyrocare doesn't compete, it cooperates. How does he do that? Thyrocare says, look, you are an unorganized player. You have put an analyzer. And that analyzer, as an unorganized player, you can get only, let's say, 100 samples a day. And that analyzer costs you, let's say, 50 lakh rupees. And you run that analyzer twice or thrice a day for this 100 samples that you collect. So your cost per collection is, let's say, 200 rupees, let's say.
Okay.
So you need to charge about 400 rupees to break even because you have your lab, bijli, personnel, profit, right? So you have to charge 400 rupees to break even. Why don't you give the sample to me? 1, I have NABL accreditation. So I have a better accuracy of test than your analyzer. 2, my analyzer will process 50,000 samples a day. So my cost per sample, for you, the cost per sample is 200 for doing it inside. For me, to do it is 20 rupees. So I'll sell that sample to you at 150 rupees, the result. So when you do it yourself, it's 200 rupees as your cost. And it may or may not be accurate. So you're open to litigation and open to, different risks.
Right.
I'll do it in a complied fashion, SOP standard fashion. And I'll give you the result in 150 rupees. Then you sell it to your customer for 400 or 500. I don't care.
Right.
So
they take care of customer acquisition.
Yes.
You take care of the
capacity.
operations.
I do the operation. I'm a back-end operator. Now, as a back-end operator, again, is the same logic of diagnostics. If I have the machinery, and if I'm collecting samples from 100 different guys and I'm using my machine 24/7, my marginal cost of each test is zilch. So whatever I charge flows to my bottom line.
Correct.
It's just about how I can increase volumes. That is it.
Interesting.
Thyrocare is the only lab in our country where 97% of the tests are done in NABL accredited labs.
Wow.
97. Mind you, the economy average, as in Indian average, is 2%. Thyrocare has 97% NABL accredited labs.
Wow. So it is similar to the Krishna Diagnostics, but here it is, instead of B2G,
yes,
it is B2B.
B2B. And Dr. Lal is B2C.
Right.
So these are the 3 models you have. So now healthcare, 5 buckets. Within 5 bucket, let's say diagnostic, 3 buckets. B2G, B2C, B2B. Within hospital, 2 buckets, multi-specialty, single specialty. You see how diversified even a healthcare product can be.
Right.
And people have this perception that healthcare is thematic, sectoral.
So what I'm understanding from the way you think about investing in businesses, identify businesses which understand what their strengths are
Yes.
and specialize in that. Don't try to do the whole value chain.
No need to.
Just only focus on the one thing that you're really good at.
Absolutely.
Partner with other players, because that way you're more cost efficient.
Yes.
And in the future, if you are very, very cash rich, then maybe explore in
Do
the
something
future.
that you want, right? Today, because the healthcare market is so small, you don't need to go out of your comfort zone.
And do everything.
Yeah, investing and business is like playing a cricket match. You can choose the pitch you want to play on. Now, if I have a choice, why will I go to England or South Africa and play on the bouncy pitches? I'll play in my backyard, where I've been playing since my childhood. I'll play on my competency.
Right.
I'll almost guarantee myself a century, because I've been playing there for 20 years. I know the business, I know the pitch. And there's no need to move out of it, because everything is growing right now. See, the need to move out happens when your current line saturates.
Right.
Our current lines are young. They're growing. Saturation is way beyond.
Correct.
Right?
These are all like blue oceans,
Which
most of the people don't know. And all of us, when we are thinking about business, we are thinking about, let's build an app.
Yes.
Right. But I think this ground level kind of stuff that is there out there, opportunities.
Yeah.
I honestly had no idea that all of these things exist. And I'm like, probably I'm in the wrong business. I should do this as an entrepreneur.
You're in a
purely
great business.
thinking from capital efficiency point of view. I'm like, okay, probably I should explore something else.
Now, and think of the sensitivity perspective as well, right? As an individual, God forbid, tomorrow if our economy goes down the drains, inflation is 20%, GDP growth is, let's say, minus 5%, real GDP is minus 5%. Will you buy a new car?
No.
New house?
No.
New electric bike?
No way.
But if you broke your leg, would you go to the hospital?
Absolutely. So a recession-proof business.
Will your kids still go to school?
Right.
Education and healthcare.
Education and healthcare are recession-proof businesses that you have to go at.
Across cycles. No matter what cycle you see.
Wow. That was like a big deep dive into the world of health sector. Let's come back slowly.
Sure.
Let's come back. And now we are like, okay, this was the world of healthcare. I went into it, submerged in it, and now I'm out.
Sure.
Right. Now, beyond these sectors, you said there is education, but there's no publicly listed companies there.
Yes.
And then you mentioned about NBFC sector,
MFIs.
which is basically lending. Beyond these three sectors, you don't invest in anything else?
I do. So we obviously have, let's say, some infra EPC companies. We have some cement companies in our portfolio.
So I have a question. So let's say you have 100 rupees meant for equity market.
Today.
Right.
Okay.
And you are obviously very bullish on healthcare.
Yeah.
It is not even cyclical.
Correct.
It is going to keep going up.
Correct.
So why can't I put all my money in healthcare? Why should I invest in other sectors?
No, because you should diversify at the end of the day. And healthcare is a secular growth company. That's correct.
Yeah.
But
because see, the reason is I say this, there is something called sector rotation.
Yes.
Sector rotation is between cyclical sectors.
Yes.
One sector performs well.
Yes.
It has reached its peak. I remove money, put in the next sector.
Correct.
But if the sector is secular, which is always going up,
so
then why should I do sector rotation?
No, but you should allocate a substantial portion of your wealth to a sector which is secular. So I told you about my personal capital allocation. 30% of my wealth is healthcare. So I've parked 30% of my wealth in healthcare.
So when you mean equity, you mean you're putting in your funds, you said, right?
Yes, my funds.
Your funds are both healthcare funds.
Yes.
So you put all your money there.
All my money there.
The equity portfolio.
30% of my net worth is in my equity portfolio, which is healthcare.
Okay.
30% is real estate. 30% is gold and silver and other mutual funds. Now those mutual funds might be 10%, right? So there I might take, let's say, some mutual fund where I feel they're doing well on the defense side or on the PSU side, right? Areas where I don't invest and I don't understand those areas as well. So I let them manage my money for me.
Sure.
And then I have 10% cash. So if you then look at my equity allocation, it is 10% in other mutual funds and 30% in healthcare. So my equity allocation today is 40, of which 30% is healthcare. So 75% of my equity allocation is healthcare.
So totally you invest 30-40% in equity.
Yes.
Why is it not 60-70% as what some fund managers suggest?
Fair. So today, I feel we are sitting at a point where most people are not discounting the potential inflation we can see in the economy in the next 1 to 2 years. All signs are telling me that there is more liquidity being injected into the market. Now, when there is more liquidity and the number of assets is the same, or the number of goods is the same, it's inflation. Right?
Correct.
So now today nobody's talking about inflation. But 6 months, 1 year down the road, I'm thinking most people will be talking about inflation as a problem.
I'm already talking about what are you saying. I already feel my cost is going up. What are you saying?
No, but our CPI, WPI numbers are low single digits.
But the government has reported recently, I think 1% inflation.
Exactly.
Right?
Exactly. So 1% is nothing, right? Global average, I mean, India's history of average inflation is 6-7%. So at 1% inflation, we are nowhere, right?
So you're saying inflation is going to increase now?
Absolutely.
And then that's what will happen to
It
the
will
stock
happen
market?
in the next 18 to 24 months, inflation will go up.
And
in
what
my
do you
view.
think will happen to the stock market when inflation goes up?
Exactly. So when inflation goes up, companies that have the ability to pass on the increased cost to their customer will do well.
Huh.
Companies that cannot pass on the cost to the customer will actually decline because their margins will go down. Right?
Interesting. Very interesting.
So in that context, if you look at the past inflation cycles, which are the sectors which did well in the past inflation? Let's say 2010 to 13. So 2010 to 13, the 4 sectors which outperformed everything in the Indian equity market was consumer staples, because they reduce the grammage, they keep the price the same. So by reducing the grammage,
there's a word for this.
Shrinkflation.
Shrinkflation. Huh.
So shrinkflation. So FMCG companies will protect their margins by reducing grammage. Oil and gas companies, because they are cost plus models. So even if oil prices go up, they just apply a markup and they sell it forward.
Correct.
So they do well. Commodity companies, steel, aluminum producers, Hindustan Zinc, Vedanta, Tata Steel, SAIL, because they are the commodity manufacturers and commodity prices are going up, their stocks do well. And fourth bucket, healthcare. Because healthcare, we don't care about the price.
We don't have a say on the price. You will not go to ask for discounts.
Exactly. Yeah. So one thing I keep asking my customers or my clients, right? So whoever I discuss this with, I tell them, look, if you have fever, what do you take? Do you take Dolo, Crocin? What do you buy? Dolo, right? I'm assuming everybody in the room is Dolo.
Yeah.
Give me the price of a strip of Dolo.
I don't know, 10 rupees, 15 rupees.
The fact is you're guessing, right?
Right.
It's about 33 rupees 76 paisa. But the fact is you don't know. And you have purchased it at least 10 times in the last 5 years.
Correct.
If not more.
Correct.
And you still don't know the price. Now that's the business to invest in. The customer doesn't care about the price. What if I told you that Dolo prices have doubled in last 7 years? It still doesn't matter to you. You will still next time buy at Dolo.
Correct.
Because the fact that it's Dolo is far more important than whether it's worth 34 rupees or 38 rupees or 45 rupees. That doesn't matter to you.
Right.
That's the business to invest in.
So, okay. So you're saying inflation is going to go up in the next 18 months, 24 months in India, due to which the entire broad market will not do well.
Correct.
But certain sectors will.
Correct.
But that still doesn't explain why only 30% of your money is in equity. It could be 60% if you know that these are the sectors will do well. I'll put my money.
That's fair. So look, my asset allocation depends on my personal circumstances.
Okay.
And I have 30% in gold and silver. Now that is basically because of my dollar debasement theory, right?
Correct.
So I feel dollar has had its time, right? 50 years of dominance, 1973, Bretton Woods being abolished by President Nixon.
Right.
To date. Dollar has had a fantastic run. They have exported inflation to every country by printing dollars.
Correct.
But now their time is over. Now you have BRICS talking about a common currency, which is being backed 40% by gold and 60% by their respective currencies. Now you're talking about oil trade happening outside the dollar. Now you're talking about India and Russia trading with each other in local currency and Russia being able to invest that money in the Indian capital market, the surplus rupee that they would be left with. They can invest in Indian capital market.
Nice.
Right. So you are having all these things happening in the world, which tells me that fiat currency probably will lose its value fast. So one very interesting exercise you should do. We generally look at dollar prices. We look at gold prices in dollar, right? Invert the chart. Look at the dollar price in gram of gold.
Okay.
The chart will appear like this because the gold prices have gone up like that, right? So when you see this, you say gold is getting expensive. When you invert that chart, say what is the grammage of gold for $1 unit, you will see that dollar has lost substantial value.
Right. And on top of that, the Indian rupee has fallen against the dollar.
So we have lost more value than the dollar has.
So that's why keep your money in gold. That's why 30% is in gold. Double protection.
Gold and silver. Gold and silver.
Wow.
So these protect me from
these things
a debasement, a currency debasement situation.
So you're saying that will continue happening?
It will continue.
In the next couple of years.
No other country has a choice. See, before 2022, almost every country had almost all of their reserves in dollars. Some of it in gold and silver, but majority dollars. But something happened in 22. The United States froze the assets of Russia. For the reason that Russia did not fall in line with the geopolitical whimsies of the United States.
Right.
That's not a valid reason. I'm a sovereign country.
Yeah.
I trusted you with my wallet.
Yeah.
And now you're saying because I'm not listening to you,
You're freezing my money.
you're freezing my wallet.
Yeah. You can't do that.
You can't do that.
I've lost trust in your currency.
So when Russia loses trust, the entire world is watching. They lose trust as well.
Right.
Now, when they lose trust, what happens next? They sell their dollar reserves and they accumulate gold and silver. So China at the peak had 1.2 trillion in US bonds.
Okay.
$1.2 trillion in US bonds. Today, I think that number is about 750 billion. So they've already sold 450, 500 worth of $1 billion of US bonds.
Okay.
And that money is going where? Gold and silver.
So that'll keep continuing happening.
Obviously. I can't trust the US now. Tomorrow, if he doesn't like my strategy or India's strategy of supporting Ukraine or Russia or whatever, he'll freeze my assets.
So is all your money in India, or do you also look at other economies outside India?
All of it is in India.
All India.
All of it is India. So I don't do international investing at all. Because specifically, if you see most of the vehicles that we have in India today, they're all designed to invest in the United States.
They're not designed.
Most of them are designed to invest in the United States.
Okay.
But because most of these investment theories are backward looking. Last 50 years for US have been great. I don't think next 50 years for US will be great. So I should not be investing in the United States.
But
today.
what about the AI boom?
No, let the AI boom be there, right? I mean, 5 companies, I can't invest in those 5 companies. If dollar loses its value, those companies will not be saved from that, right? Because
How
those
much will
companies
it
are
lose its
also
value?
earning.
Like, for example, if a Tesla,
Yeah.
for example,
Yeah.
Elon Musk recently said that Tesla will be worth $100 trillion in the few years.
Okay.
Let's say by 2040 it happens, for example.
Let's say.
Even if the US dollar loses value by half,
Right.
you have still like
$50 trillion
50 trillion
worth, right? In
money.
today's terms.
Yeah, in today's terms. So you made a lot of money, right?
So be it. I'm not bothered by that. Look, for me, the worry is if I send money abroad and exchange rate today from 91 goes to 40 or 10 or
Why
5.
will that happen?
Because dollar will lose value. Understand this. US government at the peak had 12,000 tons of gold.
Okay.
Today they have 8,000 tons of gold.
Okay.
Where did the 4,000 tons of gold go? They went to Germany and France because sometime during in late 1980s, Germany and France saw that US was constantly printing currency and devaluing gold. So they said, look, I don't want your dollars. Take your dollars, give me the gold.
Okay.
US shipped some gold and then Nixon came out and said that now dollar notes are not backed by gold.
Okay.
Because Nixon knew, had he not done that, all the gold of US would have been taken away by submitting dollars to the United States.
Correct.
So that's how they debased it. Now, the moment you debase dollar to gold, the paper is just a promise. But what is this promise backed by?
Donald Trump. Today.
The military power. If you don't listen to me, I attack you, right? Which is why US defense spend is so high.
Right.
They don't have enough gold.
So their
just
entire currency power is dependent on the military power.
Yes. It's backed by the military. It's not backed by gold anymore.
Right.
Right? Now, India, RBI, they say they have about 700-800 tons of gold. But if you read research reports, Indian households plus RBI, we have 12 to 13,000 tons of gold.
Wow. Okay.
So if tomorrow a dollar debasement happens, a currency debasement happens, and if all of us go back to a gold standard, for instance, India will again be one of the richest countries in the world.
And you're saying that is a possibility?
I'm saying that is a possibility. It's 1% possibility.
Okay.
But when these things happen, nobody knows in advance. If you go back in history, read up 1945, 1973, all the past empires when they fell, the British Empire, the Scottish Empire, and then the French Empire. When you read about them, what you realize is nobody has been able to forecast these things. The world is not that simple anymore. With the advent of nuclear weapons, it is no longer important as to how many soldiers you have.
Yeah.
You press a button, I press a button, we are both done.
Correct.
It's as simple as that. Doesn't matter you have 5,000 nukes, I have 100 nukes.
Doesn't matter. Right.
My 100 nukes are equally deadly as your 5,000 nukes.
So military power doesn't mean anything anymore. Because if you have a nuclear power,
yes,
we are the same.
We are the same.
That's why US didn't want other countries to develop nuclear power. Because that's where they maintain
Which is why
their
India had to do it while hiding it from the United States.
Right. The Pokhran.
The Pokhran test. This all linked, right? So when you think about this now, this is why India is not in a hurry to announce a trade deal. We are not scared of you anymore. Not anymore. Which is why China went headlong with US. US economy is still twice the size of the Chinese economy.
Correct.
But China went headlong with them. They're not scared anymore. You can't. So we no longer will have a unipolar world like we have had in the past 500-600 years. We'll have a multipolar world. So what I'm saying is, when I do my asset allocation, I'm doing it for a generation. I'm not doing it for this year, next year. And I told you about healthcare, right? It's 5 decades of runway.
Right.
So 30% healthcare, 5 decades. Gold and silver, 5 decades. Doesn't matter to me what Trump does and what then next Biden does or the next hero does. I don't care what Modi does or the next Yogi does or the next Rahul Gandhi does.
Right.
I don't care. My money is in gold and silver. Gold and silver are the hedge to any global, problems occurring. My money is in healthcare. If everything is okay, my economy, healthcare will do best. I have real estate that will appreciate if fiat currency goes down the drain.
Right.
Because it's a real asset. And I have some cash, which I'll decide when to put and where to put.
I think on that note, Aditya, let's end the conversation.
Fantastic.
I
Sure.
think that was amazing. I would like to say this as, I attended this world-class lecture where I could talk to the professor.
Oh.
And it's like you've written a book, and I've read the book by having a conversation with you.
Thank you
Your
so
2
much.
decades of experience just coming out every single minute. I'm sure the audience who've been watching it until now, I'm 1000% sure that they're 10 times smarter today if they've listened to this for every single minute. All right, guys. I hope you guys enjoyed this conversation as much as I did. But on that note, we'll have to end this conversation for now. And if you had any suggestions on how this conversation could have been better, please feel to drop those additional questions or comments or feedback in the comment section down below. And if you have any recommendations for future guests, please mention those names down below and we will get them for you on the next one. On that note, guys, I'll see you in the next one. Before you go, guys, if this episode gave you even one insight that made you think differently about money, don't just keep it to yourself. Share it with your friend or family member who could use it too. And if it sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make these conversations sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with at least one new thing every Wednesday.